Hey Lance, how are you?
Hey, bro, can you hear me?
Yeah, I got you.
Oh, yeah. I think I'm on the wrong microphone, but I guess it still should work.
You sound fine.
Okay, sounds good. Oh, yeah, I just changed to the nutty. All right.
So you're gonna laugh at me. So I got stuck in the Texas weather
Yeah.
yesterday. Ended up
You're in
having
the house
to
already?
spend the night in Houston. My flights got canceled, and
Ugh.
so I was out of clothes. So
Oh, that's why you're wearing your Texans. I was about to say, are you a Texan fan? I'm like,
I'm not a Texan fan, but I had to become one very quickly.
yeah, they're probably pretty cheap.
Yeah,
How
it wasn't
close-
that expensive.
Where do you normally live?
I'm in Charlotte, North Carolina.
Oh,
What about
nice.
yourself?
I'm in San Antonio, actually. A few hours
Oh,
from
are
you.
you really?
Yeah, the suburbs of San Antonio. So,
Nice
Russell,
part of
the
the
Russell
nice part of
Martin.
the state.
Yeah, it's really cold. We've been off 2 days for school,
Yeah.
but should be back tomorrow, hopefully.
Yeah, so the hotel that I wanted to stay at, which is right at the airport in Houston, full. So I ended up having to go to how well do you know Houston?
It's a big city. I know Chinatown. I eat there a lot.
Okay. So
Chinatown's pretty much the only area I know, to be honest.
got it. Well, up near Intercontinental Airport, it's not the best part of town.
Yeah.
And so I was like, oh, Hyatt Regency, I'll do that. And they got everything but barbed wire on the fence going around the Hyatt
On
Regency
a
up
on a
there.
Hyatt too, right? Yeah.
Yeah, the Hyatt Regency. So
Yeah. Okay. Yeah.
it is what it is.
You're still around now. That's what matters, right?
Yeah. So I was on the 6:30 flight out this morning, got home at like 10, which is fine.
Yeah. Nothing wrong with that. All right, so
So
what do you have? Obviously, we can meet as many times as you want. So if you want to deep dive into one thing now, it's fine. If you want to do a little bit of a few things, it's up to you.
so you obviously know I'm in a bit of a unique situation with what I can buy and what I can't for myself. I'm
Yes.
actually doing every trade in my daughter's account,
Yes.
which she's not subject to that.
Are you, is it for compliance reasons for your job?
Yeah, so I work for Nuveen,
Okay.
and I'm a portfolio manager in the real estate group.
Oh,
And for
well,
some
yeah, of
stupid
course.
reason,
Yeah.
for some for some crazy reason, I have no access to the public markets. I mean, I'm an industrial real estate guy.
Right.
Lock doors and concrete floors is what I do. And
It's weird how you wouldn't be able to do that. There are some CPAs that need to go to the compliance officer, so they usually don't bother either, and they're in a similar
yeah,
situation to you. But interesting.
so
Can you buy any real estate investment trusts or REITs? Because I
um,
probably
I
most of them.
can so I can buy anything, but I have to pre-clear it if it's an individual security, not an ETF.
Okay.
And I'm subject to a 60-day minimum holding period.
Yeah, that's fair enough. How long does it take to get cleared on a certain position?
They clear it immediately, but if it's anything that
Okay.
is within it's a commonly traded stock,
Yes.
you know, we're probably trading in it that day, and there's no chance in hell I ever get cleared.
Yeah. I'm
So
just
I,
wondering
I've
for
just I've
more.
made the choice, the active choice to just focus on ETFs
Right.
because I don't have to pre-clear them and I'm not subject to any holding period. So
It makes sense. I was just thinking another avenue to eventually look at is to do more of those longer term conservative type covered call plays
yeah,
where if you could get clear, like the trade I did today for Bank of America, I mean, it's a pretty straightforward, if you get assigned, just hold it, sell really low delta covered calls against it. I know a lot of people that do that stuff. It's pretty conservative in the because the
yeah. So I
IPs,
would literally have to sell a call
yeah,
60 days plus
yeah, okay.
as
Which is
well.
reasonable
So
too, and it's pretty hands off in the end if you're able to do it that way. You
yeah.
literally just sell it and then just wait. Okay.
So one thing I
What are
wanted
the
to do was
expenses?
kind of deep dive into with you on like how you go about. So if I'm thinking in terms of applying what you're doing to the ETF world a little bit more, and I know that you have you're running a business. I get it, and so you've got to put the trade recommendations out that are going to work best for the majority of your investors and not one person. So I totally understand. I kind of want to get inside your head as to how you go about choosing the ETFs or choosing the individual securities for your daily recommendations, not your zero DTE. And you kind of understand that a little bit better. So maybe I can kind of program that myself.
Okay. Well, let me share my screen real quick and
Sure.
get that going. All right. I had my share price, right? If you looked really carefully, you could see how much my account was, but it's all right. Let's see. This is a basic scanner that I look at. I don't really use it too much in the end. And I think it's actually different parameters on the laptop at work. For some reason, when you download Thinkorswim twice in different computers, it doesn't save the same setup.
Okay.
So I don't know if it's even going to come up with anything. Oh yeah, I was doing the ADX crossover, but I don't even use that honestly. Um, very basic general scanner of what I look for cash secured puts, not for spreads, but we want to go a little bit low on the share price, usually for a lot of members, because if they're selling $70, $80 strikes, it's hard to do much. So I left no minimum, up to 80 maximum, but sometimes I'll even cut that to like 30 or so. The delta, I want, you have to do negative for the put side. So negative 0.25 to around negative 0.1. If you go higher delta on the parameters I put, you're going to see pretty risky positions. And even when I do it this way, some of them are pretty risky as well. Base expiration between about a month to 45 days. And then I want to make it at least $10 on it. So I'll do a bid of 10. And
A bit of 10. What do
yeah,
you
a bid
mean?
of 10. So make at least $10 on your trade. It's not worth it if you're gonna get less than that. You know, like why bother getting $5 or $4 to start it? Again, obviously you could change any of these. Do you know how to use the Thinkorswim scanner? Like
I don't. I don't use
it's not too hard if you have Thinkorswim. Just press the scan tab and you could add different filters you want. These are mostly different options or studies even. So you could get really involved and deep dive into this stuff if you wanted to. Like you could put in, does the Bollinger Band cross over the Keltner channels or not? Or did you just cross the moving average of so like you could get ridiculous, but I don't really look too much into that in the initial scan here. Anyway.
So maximum of $80, a delta of 0.25 to 0.1.
Yeah, because I don't want super high deltas.
Yeah.
If it was a conservative play like Bank of America, I could have done a 0.3 or so. But in general, they don't pay enough in premiums anyway. So I was
Right.
look for relatively lower deltas.
What about percent of buying power? Where do you go
I
with that?
looked on that. I did return on risk, which is very similar to percent of buying power. You could do a few different parameters that are very similar to that. I think there was return on cost as well. It's very similar. I just did return on risk to see how much you're actually putting in fully cash secured. And here I just set it as 3% minimum and 10% max. Because if you go higher than 10%, you're going to see some really risky stocks that you probably never heard of.
So you're looking for a 3% return
Yeah, so the
on the required margin or
I think
on.
it's on the total cash used.
Okay, so in the event you got called, you will have already received 3% on the amount that you're called.
Yeah, it's because you're taking it like if you're doing a $10 put, you're making at least $30 on that. This would be 3%.
Got it.
So by doing that return on risk of these parameters will automatically set up at least 3% on the trade. Because if you didn't have this, and then you did a bid of Well, if you did a bit of 10, but you didn't have the return on risk, it might show a lot of stuff with a bit of 10 in the end. That might be really high or really low returns in the end. Like it could be a $2 stock with $10, you get 5% there, but it's probably not worth it because it could be super risky. It's hard to say.
Okay.
This is just my intro. I don't even use this every day. I'll sometimes look at it to start off.
And do you use TA at all for any of that
Yeah.
analysis?
Well, then I go to technical analysis afterwards.
Okay.
And then I actually do more of the TA on the spreads than the cash secureds, but excuse me. I have that teacher voice that starts to lose. Alright, so Bros 32 is 123. I'll just look at it first. This is the Dutch Brothers, a coffee place that my kids love. Good coffee in the end. They might eventually be a mini Starbucks if they keep growing the way they do, but that's 10 years down the road or whatever. So they're
Right.
still a startup. So then at this point, I'd want to look at if there's multiple touches at a recent support level. So it's been on a big run up, but you can see over here there's multiple days at
Right.
around the $33 where it bounced off, bounced up. And this is a 3-month chart, by the way. I do daily 3-month.
Okay.
I think my camera's messing up because I have too many programs open, but you just ignore that. So around 33 is one place. The absolute low is 26, but you can see again, like around here, it touched here at 29, 29, 29, right?
Yep.
So I would look to solid cash your put either at this level if it paid adequately or the higher level. So it's probably not, but let's check. I mean, the parameters showed that it did at the 33 strike. Obviously, it might be a little different right now with the market closed.
Sure.
So if we go 45 days out at the 35 strike price, which is a little bit risky because we saw again, it bounced a few times at 33. Although it is at a pretty recent high, I would want to try to sell a put a little below where these multiple touch points are. So either that level or that level. I could actually draw them out here so you can see it better. But
Yeah. And you
I'm
use
probably not going to do
you
this
use the volume
position.
profile quite a bit.
What was that?
The volume profile that you've got up on the screen too. You use that.
Yeah, I like volume
as well?
profile too for the 3-month daily chart, just so you can see where there's a lot of volume. In general, institutions are interested in the play. If you have a lot of people buying at a certain price, you could act as a support.
Sure.
Like right now, the 34 is a reason why I might actually sell right below the 34 because that's the highest part of the volume profile. So I might end up selling the 33 if it paid enough. And then at that point, I'm going to look at the trade tab. There's no 33 for that. You have to go to the weeklies on that, it looks like. So if I was going to do a weekly, the 33 paying 100. So that gives you about 3%. Or at least 100 to 150. So when the market opens, you might get somewhere between that 1.2 or so. So you'd make 3.5%, 4% on that trade in 37 days. And then I just look to buy to close it at 50% profit in most cases.
Okay.
That's a little bit of a higher ticker stock. Just for members, because a lot of members don't have, tens of thousands of dollars. They're gonna be looking for lower share prices as well. So sometimes in the scan tool, I'll change this last to like 20 or something. It's gonna significantly lower the results. But this gives us another way to go on it. That's mostly what I do, and sometimes it'll take me 5 or 7 different stocks that I look at before there's one I'm like, oh, yep, that's what I'm going to do. And I tend to look at this in my planning period, which is 10:45 or so in the morning. So I'll actually write out the alert on my phone at that point, and then when it's lunchtime and I'm ready to actually send it out, I just double check to see if the prices and premiums changed at all. And they sometimes change slightly. Like obviously the stock price could be a little different, but usually the premium received is very close to that.
Okay. And then for the put credit spreads.
Yeah, so again, I don't know why, but my watch list isn't on this computer, it's the one at school.
Okay.
Um, this is the S&P 100, so it's a little bit more, or it's pretty diversified as a 100 stock list. But if you keep it really broad to like S&P 500, then it's not going to necessarily be. It's going to be pretty hard to find some good positions in general. I guess I'll just list out a few of the things I look for the put credits. I want to get at least $25 in premium. Because then a 5 width, you'd make at least 5% on that. I'm looking for a delta no more than 0.12 or so. If you're aware of standard deviations and reversion to the mean and all that, around 0.16 delta is one standard deviation away. So I like to
Right.
go get a little bit of cushion from that, and around 0.12 delta is like the max I'll ever look at. Like even if I'm at 0.15, I usually just try to go even safer on it. I want to be at least, I would say 6% or so out of the money from the current position in pretty much every case for a stock. For a ETF, you could probably be a little more reasonable and say around 5%. So right now SPY is at so SP will start coming up 410. So 410 times about 5%. So I'd want to look around 20 points lower than that as my minimum strike price, right? So I'm going to look try 380, 370, and the alert I made was 368, I think it was. Just now.
Okay.
At that point, I do very similar things that I looked at before. I'll look at the volume levels. I'll see if there's recent supports and resistances. So if you look at SPY in the last few months, very herky jerky there. You can see a lot of points here. The
Yeah,
multiple
380 is a
tokens.
big number. 390 is a big
Yeah,
number.
here's around 392, 393 is a big one. And then
Yeah.
there's a bunch at 378 or so. So I
Yeah.
want to go below both of those points because if it gets to this point, there's a good chance it might recover and come back up. And then if it happens to keep dropping, go to this point, you might end up getting close to a stop out if you're going around 368. That's why I like sending the alert prices and I don't actually manually, sorry, I don't put in a stop order for these. I usually put an alert price slightly below the lowest support level. So like right here around 380 is a good support level and it's pretty much near the bottom of it. I would want to support around there. So 375 or so. I forgot what I actually did today. It kept moving so fast. Like I typed it in like 3 times.
Yeah.
I did 368 alert 375. Wow. So my 30-minute pass really appreciates that I remembered that. Okay. You can see like how it's below like all these different days, right?
Yep.
So that's why I put my mark at the 375 as well. Oh, that's interesting. I put the mark, so I put the alert, but I didn't put the trade in yet. I'm like getting ready for tomorrow morning. These days with Jerome Powell, it's just hard. Like I don't
I
want to
agree.
put the alert at lunch. I don't want to put it in the middle of talking. So I'm gonna wait, and now tomorrow morning people are gonna be like, I can't get in at the same fill. I'm like, sorry, we'll work on it. Anyway, RSI is a pretty useful indicator. If it's trending upward, but it's not super high, that's usually good in general. If it's trending down, but it really low, like at the 30s or below it, and then you start to see a slight arrow going up in the last few days, that could show a possible reversal. So I'll take those trades too, as long as those other parameters are met, or I'm able to see, at least 5-6% out of the money. Ideally, the more is better, obviously, and then make at least 5% in your returns.
Okay.
This indicator I look at for net high versus low. This shows like all the stuff. I think all the S&P 500 and how many of the positions are positive, how many are negative. So you could kind of see if it's an upward or downward trending day. That's not necessarily that useful for this with credit spreads, but I know some traders like to wait for a down day and then enter a trade. And there's nothing wrong with that, but I have to give out alerts every day. So
Right.
try to see if there's a different situation, even if it's very bullish. Like I'm still gonna enter that SPY at that price because like level here, level there. And then if it breaches it. And that's gonna occasionally happen. I mean, we've been doing really well this year so far, but it's
Yeah.
all a percentage game. Not every trade is gonna work that way. So going back to your situation, if you have the funds to do it, you might want to consider doing almost like a ladder strategy of every few days or once a week or whatever amount that you're able to do of your account size and just keep entering them in. So if the market drops the next day and you enter another one in tomorrow, you could enter in even lower. And if it drops another day, you're entering another one even lower than that. And literally just stagger them in at approximately the same deltas. Have you ever considered something like that?
I have. In fact, I do have a couple of trades I do, not daily, but weekly.
Yeah.
And so I will do on Fridays, actually, I enter in I'll do a Q's iron condor,
Mhm.
usually both sides, 0.05 delta
Mhm.
on the sold options, usually 10 wide. I will do an IWN or a rut strangle, and again, usually 0.05.
Mhm.
I have a laddered approach that I'm taking with the diamonds, where once a week I will sell basically a condor, that's again a five delta condor, that's 3 weeks out, and then I'll usually let those just expire. So at any one particular time, I'll have 3 trades on,
Okay.
or 3 different time frames on, I should say, at any
You
one.
like doing the you like doing the defined risks with or have you tried straddles and strangles with them?
I do a mix of both is what I do.
What percent in general do you use that are strangles like undefined risk compared to defined?
The majority of what I do is undefined.
Okay. You
And I
say
do
about
that for
80,
the purpose.
20 or so?
I'm sorry?
What do you say about 80% undefined, 20% defined, give or take?
Yeah, something like that. I
That
mean,
that's reasonable. Yeah.
I like the adjustability of the undefined risk.
Yeah.
You don't get boxed in as much if
Right.
something goes in the wrong direction. But I've also
Yeah.
gotten to the point where, like, when stuff starts going in the wrong direction, I almost immediately, not immediately, it's been my experience that if a trade doesn't start going in your direction sooner than later, it's probably not going to. And so I'll, after a period of time, if the trade is stalling or it's not going in my direction, I'll move the number to break even almost immediately.
Yeah, and a lot of times, like a strangle could just wait and just wait, and then you might as well just get out in most cases, because then
Yeah,
the camera risk could hit you if you're really close to expiration anyway.
yeah, and generally speaking, to that point, I'm usually out. Like most of the stuff that I do, other than the diamonds, other than a couple of trades, the majority of the stuff that I do, like especially in the commodity space, I'm going, 30 to 55, 60 days, and I'm out at 21. The
Yeah,
typical tasty type
yeah,
mechanics.
yeah. You're going almost. Besides the deltas, you're going pretty much exactly what Tasty Trade recommends, which is fine.
Yeah.
And I do very similar what they're doing too. But I just like the lower deltas as well, and I think you might seem like you are as well, just because like you don't have to stress out so much on a 0.15 delta every time if you're starting them out that way. Sure, it could be risky if you're starting 0.03, 0.05, but still takes a little while before it goes against
Yeah, that's true. Yeah, I have found that on the commodities, the sweet spots between 5 and 10 is what is my general experience, is that's the sweet spot. 5, you're just not quite collecting enough. And you go above 10 and you can get yourself into some trouble.
Yeah, it has to be not really like a work-life balance, like you know, are you gonna check your positions every minute versus like, are you just gonna go nuts because you're too worried about it? Even though, sure, you're taking in more in a higher delta, but I personally wouldn't wanna be eyeing every minute and seeing what's happening.
Right.
You should I wonder what your thoughts are on the recent trade that I just did with it's essentially managing a strangle, because you haven't seen me do that yet. So,
No.
and I was thinking about what to do. I might have went a little quicker than normal, but it's hard to say. So let's see. I gotta figure out where. Okay,
I put that one on today, by the way.
you put the. Oh, this one you mean?
Yeah.
Okay, that's fine. That's a separate one. But what I meant here, so on the actual trades, we had. So on January 13th, I did a 46-day TE, 34.50, 43.50, right? And the delta was 0.05 on both sides. Then a week later, I did the same expiration date because it's 7 days less. I did a 42.50, pretty much the same premium, pretty much the same delta. And right now that 42.50 is already a 0.3 delta. So it went from 0.05 to 0.3 delta in 10 days. It's a pretty big dramatic move in the market.
Mm-hmm.
As I think another member in Theta was saying, it went up 9% in a week or whatever. It's like, yeah, but anyway, so it went up pretty quick. So the delta was 0.3 on it on the call side. The put side was pretty much free. I mean, I bought it back for 1.6 with 27 days left. And I didn't know the total premium I collected on just the put. Because I wonder if there's yeah, I guess you could check my email. That might be the way to go. Because if you check your email on like Tastyworks, they'll tell you how much each individual option was, like how much you received for it. But when you do
Right.
strangle or straddle, you won't see that. You just see the total of both. Anyway, so I bought that back and then I rolled up to a 39.50. That ended up being a 0.15 delta. So my call side went from 0.05 to 0.3. Pretty dramatic move. I want to collect more premium, same expiration as the original 0.15 delta. Took in a decent amount of premium, and this is more of a defensive play in the end. That's how Tasty Trade somewhat recommends how to do it, not exactly.
Yeah.
Like I know they want you to pretty much, I think in many cases, wait until it hits in the money and then sell a put pretty much in the money as well. Make it a straddle. That seems a little too extreme, but I don't know. What are your thoughts on what I did there? Waiting for
So what I normally do when I adjust a strangle is I will move. So the last thing I want to do is like move the untested side so close in
yeah.
that if things reverse back, it's going to be a problem.
It's very tricky to know what strike to use for those situations.
So I'll go back to the delta that I wanted to be back in the first place. So if I originally put on a 5 delta, and now the untested side is, say it's 1, less than 1, whatever the hell it is. I'll roll the untested side up to the 5 delta at that point.
Okay.
So you're not collecting quite as much of a credit, but I feel like I don't get whipsawed as much because of that.
Probably. You just don't really collect much money at all doing it that way. I remember like 30.
Yeah, and sometimes I might go a little bit further. I'll take a look at the charts, etc. But I've been on the other side where I've gotten whipped around a little bit,
Yeah.
and I would prefer to do the roll up to a level that I'm comfortable with, and then I would actually look to take that trade off at break even at that point.
Right. Yeah.
Once I start rolling, I'm looking for break even if I can.
Makes sense. So right now, if I rolled up to 0.05 delta, which is the original, you'd make about $25 instead
Yeah.
of 17.50. But But yeah, like a whipsaw, definitely right. It's hard to
Yeah,
match.
the other thing that I'll do, Lance, is that like today, um, I took some strangles off before Powell because I was afraid of that upside.
Yeah. What deltas were they at around? Just ballpark it.
I don't. So I had one strangle that was had the call up at the 250 level, the 4250 level, and I took
Okay.
that off for a little bit of a loss.
Yeah.
But at the end, in the end, sometimes there's just that clown will move the market around so damn much.
Yeah.
I'd rather just be safe than sorry, and I can put the trade right back on after he's done.
Yeah. That's true. All right. Reasonable enough.
So,
I have about 10 more minutes. Anything else you'd like me to go over for now?
um, how do you choose your directions on your zero DT? What makes you go call spread, put spread, or condor?
It's hard to give a clear, like, quick answer to that. I think a little bit is intuition in the end. A few of the general parameters I look at. And there was an indicator that I was using when I first started it out. Where it gives you all the different information if you should go iron condor and then all that. But as you see it more and more, it might help. I know that's not a great answer saying it's intuition here, but most of the time, the way that I look at it, if there's not a gap up or down for the next day, that's why I say futures are 0.2 down or whatever, something like that. It's almost always iron condor to start. If there's a clear gap in one day to another, so here it closed at, this is SPX 4150 and it opened at 40, sorry, from 4,070 to 4,040. I was already thinking probably a call credit spread on that point because in general, I'm a little bit leaning on the momentum side. So if it's gapping down like that, there's a good chance that I'm gonna keep going down that way.
Mm-hmm.
But then I'm waiting until 9 o'clock until I'm gonna actually make the position. I'm trying to move this thing out of the way. All right. So I'm waiting until 9 o'clock to see if there's a trend in the market. And it opened 40.50 this particular day. It went up to 40.60. So pretty close to the gap. At that point, I'd probably go Iron Condor. I think that's what I did that day. Just because you see it trending back towards the end of the close last day. So if you see a clear direction in the 30 minutes from market open to the 9 o'clock, if I initially said one direction and then that reversal happens like that, I'd probably go Iron Condor or put credit spread side. In a different day like this, not much of a gap from one to the other. But then
Right.
you could see a clear uptrend in the first 30 minutes, right? And we
Yep.
went from 40.50 to 40.67 in 30 minutes or so. Actually, it was around 40.70. So that's a pretty clear uptrend. I'm going to go put credit spread in general. And I'm going really far out of the money. This drop here didn't get me out of it that I'm aware of. I think it might have been close, but so yeah, you could do the on-demand feature. Have you ever tried that out? You could go in the bass and then see a possible day back in time, and it'll show you the option trade, like the actual option prices of each level. It uses up a lot of computer like power on that. So
I've
if you
never
are
used it. I
interested,
don't use Thinkorswim, so
okay. But on a day like this, the 40.50, the VIX was around 19 or so. When it went up to 40.70, I want to be selling a put credit spread, pretty much one direction on that one. And I want to go I usually go 0.05, 0.07 delta again. That's pretty much around 2 standard deviations away. So
mhm.
even if I'm wrong in the direction and it turned against me here, I was probably around 40.10 or 40.20. Let me look at what I actually recommended that day because now I'm curious. It's hard to remember what I do from one day to another with
What
this
day was that?
Friday last week. I
Friday
wonder if I got
last.
stopped out or not. It felt like a stop out.
We got stopped out one day last week. I don't
It's
remember
only
what day
one
it was.
day all year. 27th. I did Iron Condor instead. Interesting. I think I went Iron Condor because it gapped down to start, but then yeah, no, Iron Condor is still okay. It did gap a little down the open, but then it trended back up to slightly higher than the previous day. I would go put credit spread or Iron Condor that day.
Yep.
If the futures are clearly with the current VIX, if you see over 0.5% up or down in the futures before market, you pretty much want to go the other direction. So if futures are up 0.5%, you probably want to go put credit spread. If futures
Okay.
are down 0.5% or more, go call credit spread only. And don't try to play the iron condors because it's not worth it to see if the momentum hits that one side, I think.
No, that's the one piece of this that I am appreciative of what you do. More so than anything, 'cause I've done a lot of these DTs on my own,
Yeah,
and I'd rather stay away from the tested side.
yeah. That's why I just do one direction. Some people they seem a little greedy. Oh, I could do the other side, make an iron condor. It doesn't cost any more money in my buying power. But why even do that if you might get tested on that side possibly anyway? You know,
Yeah, yeah, no,
that's why I probably do more of just one side than iron condors than some other traders on it. But I'm like, yeah, you make your $30 or you lose 90 instead of make 60 and lose 180 or whatever
right.
per position. I personally don't like zero DT that much anymore. I mean, a lot of members like it. I'll still do one contract in most cases, up to maybe up to 5 contracts usually. But it's a small percent of my account. Like I don't want to be overloading these things.
Yeah, my best trade that I've been doing, I mentioned it on one of our back and forths on DM, was doing a 21 DTE 10
Yeah.
delta
Yeah.
puts. I haven't.
Knock on wood. Yeah, keep it going. It's hard
So
because like you start to think like certain trades like they just work a little better than others, but you need an insanely large sample size to see if there's viable or scientifically accurate on it. I
yeah,
mean,
yeah,
the recency bias is always going to happen, and especially if some of these new members they see 1, 2 trades that are good, and they're like, "This is awesome! I'm going to do this the rest of my life," and then they blow up their account. Like that's I'm already working with a few of these new kids. There's a new one on Discord. He's a high schooler. He's 18 years old. I'm like,
really.
slow down a bit here. And then I have another college kid too. I have to verify they're 18 because if they're not 18, they can't join us. I'm not going to be charging for that.
Yeah,
But yeah, you could probably guess who the person is, considering I said this last trade I did with a lot of time on your side. These could be really good for you. So don't be doing zero DT and blowing up your whole account
yeah,
because sure you're young, maybe it's a good time to learn that. But it's like if he does these Bank of America ones that are, make your 1 to 2% a month, you're gonna be in really good shape. Like just earning 1% a month on a blue chip dividend growth stock like that
yeah.
for 45 years, like you're gonna be incredible. So let's see what happens. I don't know. I can only say what I think.
One last question before
Yeah.
we cut off here. What delta you typically roll with when you're wheeling?
Um, at least at the same strike price, obviously. If it keeps dropping a lot and you can't get a good enough premium at the same strike, I'll sell below that at times. Usually no more than 0.3 delta, but I try to stay around 0.2, 0.3 delta in most cases. But
Okay.
it really depends because when I do conservative plays on covered calls, like realty income's a big one on mine. I'm doing 0.1 delta like 3 to 6 months out, and I just like let it be. Like whatever happens is okay. So,
Yeah,
so it really depends on the position. If it was a higher IV riskier one, I'm gonna go higher delta in general to try to get out of it. If it's a long-term hold, I'll go lower delta just to essentially think that I could pocket a little extra than buy and hold.
yeah. I'm actually holding some long ES futures right now, and I sold the 0.15 delta at the for end of month for February.
Yeah.
Um, yeah, it was like
If you can
12.
handle the buying power, let them know. Huh?
Yeah.
All right, I think that's gonna shut us off here. I'll send you a recording of this.